let's get the tweet out. Oh, come on. All right, tweet is out. Copy this into the chat, the room. All right. What's up, Josh? How are you, brother? My weekend has been really good. In fact, I tweeted about it yesterday or whatever, but my daughter competed in her first Muay Thai tournament, which was actually really cool. You know, obviously, like if you don't have kids, you won't understand, but when you know, when you have kids, there's these moments, I call them proud dad moments, right? And they, you know, depending on how many things your kids are involved in or, you know, working towards, they can be like, you know, far and few in between, right? So like watching your kid compete in her first Muay Thai tournament was definitely a huge proud dad moment, and I was absolutely floored by just how awesome the whole weekend's been. It's been great. Kevin, issues again, dude. I rebooted my internet connection about 10 minutes ago so that we wouldn't have any issues. So I already got a notification about the stream strength being weak. I hope this doesn't have issues again this week. If it does, I'm gonna have to figure out what's going on. In fact, I'm gonna run a real fast before we start. I'm gonna run a speed test. Yeah, we should be golden. I don't understand why there would be an issue. Speeds are fast. All right. What's up, Raul? We'll get started in about a minute, guys. Obviously, just waiting for more people to kind of like join in real quick. If you guys haven't, please retweet the link I tweeted out. We always want more people to be viewing this on the live stream so that we can have the interaction. If you want to share it on Instagram or wherever else you have where you may have people, maybe on Facebook, you're in a Facebook group or whatever. Definitely would make me feel awesome if you guys would give that a share and try and get more people's eyes on this stuff. All right, guys, it's 5 p.m. market time. This is a June 12th. God, I can't believe we're almost halfway through June, and we are halfway through 2022. So this is the Sunday Prep. I'm Ricky Analog. As always, let's just take care of the housekeeping, guys. If you don't have a broker that you can rely on, you're really doing yourself a disservice. If I had any broker I was ever going to recommend, and trust me, your relationship with your broker is huge, it's going to be Cobra. Like, I have a lot of brokers. I've used the majority of them. I still have 4 or 5 different brokers. Cobra is the only one I use every single day. Hands down, best customer service, most reliable, best locate fees if you're a short seller. And if you use the link in the description, you're going to get 25% off your commissions as well as 1 month free of your platform. Spikeet, guys, these guys make a product that allows you to backtest historical stock data to see if you actually have an edge, to see if they make indicators for TradingView, Thinkorswim, and I believe they're learning some others. They're also now coding, if you guys have an idea for an algorithm for automated trading, something you want to try out, they are actually diving into that realm now too. Personally working with them, we're creating a custom indicator right now that is actually going to be really geared towards the TrueTrader strategy and what we trade in there. And so I'm really excited to get that released. We're on the final finishing touches of it. So I'm really excited about that. And of course, earnings. We're at the tail end of earnings, guys. There's Oracle's after the bell on Monday. There's Kroger and Adobe later in the week. Not a whole lot. It's just that time of year, and next quarter will be here before you know it. Absolutely will be here before you know it. It's, for me personally, it's always like one's earnings season ends, and before I know it, we're already seeing like the banks report for their next quarter. So yeah, it is what it is. Normal ebb and flow. So let's get into the topic, guys. If you guys saw the title, actually the title is not reflecting the correct, at least not on my screen. So we'll get that changed. The title was supposed to be "What You Don't Know Could Kill You," especially in this market. What do I mean by that? All right, I get a lot of DMs, guys, from people talking about, hey, Ricky, how are you doing in this market? This market has been really tough for me. Are you able to make money in this market? And, the truth of it is like not all strategies work the same in all market environments. And you have to know if your strategy works in the current environment. And the only way to know that is to track data. Like I said, guys, we're going to talk about some data, and if you guys don't have access to it and don't want to do it manually because it can be pretty tedious, check out Spikeet, right? Remember, there is a link in the description, guys. You need to know, and the numbers don't lie. But if you don't have the numbers, if you can't tell me your win rate for a setup in this current market environment, or you don't know the expectancy of this strategy you're trading in this current market environment, if you don't know your numbers, then what are you even doing trading? Seriously, you're just guessing. You're just praying. You're just hoping. Oh, I hope my strategy still works in this market. And you know what? Your P&L is going to be a lagging indicator, and that is even if you stick to your strategy like with 100% strict discipline, right? And so we can talk about that as well, because here's the thing. Even if you think you know your numbers, you honestly have to understand that your numbers, you need to have confidence that they're actually representative of your setup, your strategy, your defined system that you trade. And the only way to have conviction that your numbers represent that strategy is to make sure that you're trading that strategy to the T. No breaking rules, right? You can't just look at TraderView and go, oh, I have an 80% win rate. I see a lot of people do this. They say, I have an 80% win rate, but I'm not profitable. How is that possible? Well, let me tell you one way it's not possible. Maybe you don't actually have an 80% win rate. Maybe you're trading and a setup doesn't work. Instead of stopping out like your system says to, you add. Maybe you add again. Maybe you're pretty upside down, but you dig yourself out and, ends up a green trade somehow. Well, fast forward to the end of the week and you're reviewing your statistics and it says, oh, I had an 80% win rate. Did you really though? Did you deserve it? Does your system have an 80% win rate, or did you have an 80% win rate? Because there's a huge difference. If your system should add a 60% win rate, but you forced it to have an 80% win rate, you're going to be trading numbers that don't actually represent your system. And that's very dangerous. So the other part of it is understanding, like, yes, market environments change. We're not in the bull market that we were in for the last 13 years. For the last 6-7 months, you can look at any broader market and objectively say, yes, we're in a downtrend. And, regardless if you were able to identify it 6 months ago or if you just identified it 3 months ago, it doesn't really matter. The fact still remains, the trend is down. So, maybe you started trading in 2020, 2021, and you didn't even realize that you were just kind of your success may have just been the byproduct of the market you were in. You could have just bought anything, and when it didn't work, you could have added or you could have just held, and a few weeks later, you'd be green on the trade. Well, guess what? That doesn't work anymore. And the only way to know if your system stops working is to have the data, because on a day-to-day basis, the numbers will start to change. your expectancy will start to change. Your win rate will start to change. Your risk reward won't be there. Your setups might not just appear as often as they used to. And I can't speak for every single person's system, right? I can only speak for what I trade. Now, I can tell you without a doubt, 100%, the numbers tell me. So this isn't me or my opinion or my ego. It's the system and the numbers. The strategy I currently day trade, now keep in mind I'm talking about my day trading system, is based on what we basically talk about in TrueTrader, right? Taking advantage of an emotional move up or down into key levels in the first 30 minutes of the morning. 100% still works. Every single day, there's tons of setups, and I'm not trying to say it works every time. My system does not have a high win rate, but it has a high expectancy. It's very profitable, it works very well, and the numbers flesh it out. Now, I also trade other setups. I have long-term accounts. I have swing accounts for like near to midterm length swings. And guess what? I track that data too, and the numbers tell me, yo, at the very least, let off the gas, right? And sometimes, especially with like my very long-term stuff, it's literally start to pump the brakes. There's no reason to be starting, especially in sectors that are super, super heavy, swing long positions on growth stocks. Just is what it is. Now, there will be a time when that changes. How are you going to know? How are you going to know when that time changes if you're not tracking data? You need to be tracking whatever system it is you trade. You need to know the numbers. And I've probably done a few Sunday preps on this topic. In fact, maybe High Trader can post it in the chat, or we can get, maybe we'll post it later on and I'll go back and find those episodes. So I'm not going to try to rehash like the step-by-step process of tracking your data. I just wanted to reiterate the importance of it because I get a lot of DMs from people saying, this is a tough market. Yes, for some it is. For people whose system they trade doesn't work well in this market, it's gonna be. But if you know the numbers, you can stay safe because like really, even if your system is not performing well right now, it's okay if you know and can be on the sidelines. So you don't just piss away all your portfolio. Like when the time comes that your system's working again, you got to have capital to trade. And if you don't know your system's not working and you're just paper cut after paper cut after paper cut in this market environment because you don't know from the numbers, then when the time comes, you're not going to be ready mentally or financially to take advantage. Because if you're a different type of trader that looks for a bull market and is trying to capture bigger moves like these big swing position trades, that time will come, and when we have an extended downtrend that ends, the opportunities are going to be enormous. But you got to be ready, and the only way to know is to track the data, guys. Again, I cannot reiterate the importance of tracking the data. Now, again, I'm not talking about, like, listen, you can go on Twitter right now and find 10 different experts that are high-paid experts, probably for different hedge funds or investment banks or whatever, that will completely disagree on the whole range of the spectrum, whether it's CPI numbers or housing numbers or the Fed fund rate stuff. That stuff is subjective. You can find a million different people with a million different opinions, and it's not our job as traders to know that stuff. Listen, I don't care how smart you are. There's guys that have MIT graduate degrees that are working on these problems and they still get it wrong all the time. So I don't know what makes you think you're going to be able to be smarter than them or outsmart. You just have some inside information and you just know the answer. Listen, I'm going to tell you right now, there's things that you need to know, but the vast majority of stuff in the market is the best thing you can say. The very best thing you can say is, I do not know, and that's okay. It's okay to not know. We don't need to know the why, but there are certain things you do have to know, and it's the numbers. It's the black and white objective stuff that is not debatable. I can look at my spreadsheet with my data and it's not debatable. I'm not making these numbers up. The setups are the setups, the rules are the rules, and the output or the outcome is what it is. So that's what you need to know. Stop trying to focus on all the stuff that can't be proven or disproven. Focus on the black and white, objective, rational, measurable metrics, guys. And that's it. I just wanted to hammer that home real quick because I know a lot of people are still struggling in this market. And I'm telling you right now, if you don't know your numbers, that's your first problem. If you guys, the other thing is, listen, sometimes, here's the other thing. You got to have a system. I don't want this to drag on too long because I know I just talked forever about that or whatever, but you got to have a system. And you can't just be winging it. You can't just be throwing mud at the wall because you saw X trader on Twitter. He's making 20 grand a day shorting whatever flavor of the day rips 100% off the open, right? Like, and then when that doesn't work, you can't just join some other chat room and figure out like, oh, I'm going to do what this guy does. Like, no. You need to have a system. So like if you don't have a system that's fully defined, meaning like every aspect of what you do is defined, that's the other issue. Because guess what? If you don't have a system with rules, then what is there to even measure, right? So get a system, whether that's, joining TrueTrader. We teach you guys a system from start, like every single piece of it. It's up to you guys to take what we teach you and put your own spin on it. But it's there, like it's measurable. It's 100% objective and definable, black and white. And trust me, there's other rooms out there that also do that. But there's also a lot of rooms that don't teach you a system. They just, it's a group of traders that all trade all kinds of different shit. And I'm telling you right now, if you're in a room full of 400 traders and they all trade, 20 different strategies and systems, you're going to be that person that's chasing the shiny object all the time. You got to find a system and you got to block out the noise. Like you're going to see other people trading other systems. Who cares? Focus on one thing and learn it well. And then you can learn new things, right? So make sure you guys have a system. That way you can measure it. And then you can adjust and move forward that way. Again, I didn't want to spend that much time on this. I apologize. Let's jump into the actual Sunday prep now. As always, guys, let me hit the disclaimer real quick. Guys, neither I, TrueTrader, or any of its representatives are registered as security broker dealers. I'm not a licensed financial advisor, believe it or not. Anything I talk about is just my opinion. It's not a solicitation to buy or sell any stocks. It's absolutely just for entertainment purposes. All right, guys. So the broader market, let's talk about it. First and foremost, let's actually hit the weekly chart. No need to be looking at a daily yet. All right. There's a few things, and again, let's stick to the premise of identifying things that are objective, black and white. Okay. People want to talk about the CPI number and how it was higher than expected and caused this big flush. I don't care. What is objectively, rationally, undebatable right now is that we still have yet to make a lower low. So, regardless of what you may think, if last week's lows hold or this current coming week, we still can't break to new lows, there's still the looming possibility that we get a higher low on the weekly chart. Okay? Again, remember, the weekly higher low followed by this higher high, if we were to break over 2 weeks ago's highs, doesn't get us out of the woods. It's just the first step in the process to reverse the downtrend on the weekly time frame. But if you look at the monthly chart, all that may do is end up putting in the next lower high on the monthly time frame. So again, that's why I say that doesn't get us out of the woods. Now, there's the possibility maybe we go sideways for a few weeks, right? And maybe this is the low. Maybe we just put in the lows for June. That still leaves the possibility of a higher low in July, which if you get a higher low on the monthly time frame, and then we start to push, now you're starting to see even the higher time frames start to tell you maybe there's a bottom in, and maybe we should start to look for more higher lows or more bases to form. But again, we're getting ahead of ourselves. First things first, we got to hold the lows. If we don't hold the lows, then we definitely, objectively, black and white, have a lower low after a lower high. And then that can really start to unwind. You can start to see some of these levels we have below. I don't think those levels are out of the question. In fact, we might go much lower. Again, I'm not here to play guessing games. I'm here to make if-then statements. If this, then that, right? How do I capitalize? If we go lower, what's the trade plan? If we put it in a higher low and we start to push, what's the trade plan? Remember, that's how we attack these markets. We don't sit here and try to have a crystal ball. That's not what we're here for. All right, so as far as where we rejected the push up, not last week, but the week before, right? And then we rolled over last week. It does really look like it was a very, very logical spot to reject, right? It was right around the underside of the monthly 20, and you have the declining weekly 20, and you can see it was the recent lows. Does anybody remember what these circles were, right? These circles were the first time that the weekly chart tried to reverse, but they got this trigger up here got us into the target, which was the weekly 20, right? And then went into the weekly 20, had no reason to go higher. If the author wants to get back to the target and hold trend lower, he can do so, okay? But that's what these lows were, was the low and then the higher low, and then we pushed. So this push up was literally a retest of where that failed long cracked, right? We had the long, we could not get back to all-time highs. We just went to the target, the weekly 20, and then we rolled back over, made new lows. So this was a first real retest of that level. So it's very logical that that was a spot where it had a lot of trouble. The question then becomes, do we hold last week's lows, or do we come and test these lower lows, right? Do we come and test, as I say, like you can see it on the screen right there, it's called the rut row level, right? Why? Well, because under that level, rut row. Let's look at the daily chart real quick, and we'll start to see some levels here. Actually, you know what? Let's head into the 20-minute so we can see some of this intraday stuff. All right, so as far as support, I've got marked 38.75-ish. These are ranges, right? None of these alerts are, I want it to the penny. That's not the game plan here. I just want to know when we're approaching levels where I think support's going to show up. So 38.75-ish, and then obviously the recent lows close to the rut row level, I have a level marked, and then I have a level marked below it to signify we broke that level, right? If we break that level, plans change. If then, right? If we break the rut row level, then I assume we are continuing lower and we may have another leg down, and then the plan becomes, all right, what are the short setups? If we start to hold levels, if then, right? If we start to hold certain levels where I think support should show up and we start to push, then I may look for long setups on stocks that have good looking charts, right? Remember, we always start with the broader market, so then we can then apply it to the individual ideas, all right? If we rip back up into that consolidation area from last week, right where that annual pivot's at, right at that psychological round 4,000 level, if we just rip straight up there, guess what? If that happens, then I'm going to look for short ideas. If we get through there and keep on ripping up into 40.75, if that happens, then I will also still be looking for the short ideas because we're pushing into those resistance. And if it happens on a fast move, any kind of fast move into those levels should give some really good near-term short day trades, right? Remember, everything I'm going to be discussing today is day trades, right? This isn't the kind of market where I'm looking for swing trades, guys. The final levels that I'm really thinking might be in play next week or this coming week is 41.50s and then the 50-day. So again, those are the further away levels. I don't think they're going to hit, but if they do, I've got them marked, okay? So NQ, guys, it should come as no surprise. You probably heard me say this a million times. NQ, I got pretty much the same thoughts, right? Are we putting in a higher low on the weekly chart? I know a lot of people think this looks really ugly, right? That was a big, ugly weekly candle. Doesn't matter. We didn't break lows yet. If we break lows, then we can say, all right, might get that next leg down. But if we hold here, there's absolutely no reason that this can't do this, okay? It could be a higher low, and then we could break this level here. It just is what it is, and my job is to stay objective so that I can make money. I don't care about being right. I don't care about looking smart. I care about being able to say, if this happens, then I will do this, so that I can make money. And that's the only thing that matters in the markets, guys. Sorry, had to get some water there. All right, so as I said, NASDAQ really has the same thoughts for me as the S&P did. So I'm not going to spend a whole lot of time reiterating that. I'm just going to go right into our levels here so we can look at them. Again, that consolidation area from last week, any push up into there, that's going to put us right into the underside of the 20-day. I've got it marked at 12.2, let's just call it 12.285. Next level above that, 12.5. Above that, we're into that 12.7 area. And then above that, the 12.9 to 13,000 range, okay? That's all resistance levels where if we push emotionally into those levels, I'll be looking for the fades. If we were to come down here to the support levels, start to hold, 11.7s, I'm looking for support. Next level down is the rut row level. Below that, I want to know, did we break it? If so, we're going to have to flip to a very, let's look for the continuation lower. Now, keep in mind, if we break those levels, it doesn't mean that those unwinds have to happen immediately and viciously and violently. There's a very good chance we come break below these levels, and I'll be watching. And this is something I guess I should have said with the S&P as well. This goes for any stock I'm trading. A quick probe below that level, and you'll see this on Bitcoin, okay? When we get to the Bitcoins next. A probe below a level, and it just soaks right back up and reclaims, I very well may just pause the brakes on the shorts and think, wait a second, let's see if that was just kind of that, stop everyone out, failed breakdown, reclaim, and then I'll look for a long trigger, because that can oftentimes lead to some very potentially strong long ideas, at least for the very short term, right? Day trades. So that is a possibility, and we'll pay attention to that. I'll show you what I'm talking about right here on Bitcoin, okay? So Bitcoin, what's funny about this is when I started to write my notes for the Sunday prep, it was on Friday after the market closed. We had not broke 28K, right? So the original note said, oh, still hanging on by a thread. We are no longer hanging on by a thread, guys. We totally broke that 28K level. I'm looking for shorts to pop on anything that's in that space, like the individual equities that follow Bitcoin. Now, keep in mind, Coinbase, we pointed this out pretty recently, has started following the NASDAQ and the S&P a lot more than it seems to be connected directly to the crypto space, but it still follows the crypto space at least to some degree, all right? So what was I talking about that failed breakdown right here? This is what I was talking about. We already knew that 28,000 level was a big level, right? This level goes back way back. So when it broke down but just sucked right back up, there were a lot of really near-term, short-term day trade longs on some of these names that follow crypto space. And, it began to hold that level. It even got that push, but now we're below it, right? This so far is not a failed breakdown. Over here it was. And you can see this kind of thing. Whoops. Let me get off that brush. You can see this kind of thing happen. Look at right here, right? Well, snap down, snap back up, and then when this long triggered, that was off to the races, right? You'll see this happen a lot, these failed breakdowns. So again, just want to be clear when we're applying it to something like, whoops, didn't mean to do that. When I'm applying it to something like these big rut row levels on the broader markets, I want to see it break those levels, and then when it tries to reclaim stuff, and then keep on continuing lower, right? So there's a huge difference. You want to verify that you want to have some sort of confirmation that it's not just going to reclaim real quick. It didn't just stop everybody out, and then we're going to rip higher. All right, guys, that's the broader market. Let's get into sector analysis real quick. Here's bar chart. I have it already up so you guys can quickly see. No surprise at all, right? Hella red on almost everything. Energy was the one thing that hung in there. That shouldn't be a surprise. Consumer staples was the only other thing that just didn't get obliterated, and it still is down 2.6% on the week. So let's go ahead and take a look at our ETFs, and we'll just go through them. XRT. Now, last week, you'll remember we were talking about the fact that if we broke prior week's lows, meaning here was the short trigger, guys. If this is going to hold, you have to understand how trends work on different time frames. At the moment, XRT is holding a daily downtrend. Every time we come back up into the 20-day, we continue lower, right? So if this is going to hold this downtrend, then here is the short continuation trigger to do so. So you get the lower high, the lower low, and then we break that level. I'm only going to show you on this XRT, and you can apply it to everything else you guys see. This is how you get continuation lower. This is how the author, price, tells you it is trying to hold this time frame's downtrend. Target would be new lows. That's how downtrends continues. They have to make new lows. So if it fails to make new lows, what do we have on the weekly time frame? Oh, look at that. The possibility of a higher low. And if that higher low were to be put in and we come back above these highs, then we could lose that daily downtrend and come back up and try to test the weekly downtrend, which is the weekly 20, which is way up here still, and we have room above. So again, I'm going to be watching, do we put in that higher low? And once we triggered that on the daily chart, once we triggered that continuation short, I went and set this alert up here. Okay? That alert was set after we made this new low. Because if this fails, then I want to know when we break above that. Because that would be the sign maybe retail, that sector, is trying to lose that daily downtrend and maybe wants to go test the weekly trend. Okay? So that, you guys need to rewatch that till you get it. I mean, that is the crux of reading trends right there. And apply it to other things. Again, here's XLF. We talked about the same thing. Problem with XLF is it got absolutely obliterated, right? This is much more of a convincing breakdown and looks like it will continue trend lower much more than the XRT, right? Look at what XRT did in comparison. So this one, we break lows, rut row it is, right? But we could just come down to this 30 to 31 level, which you can see has been very important. We'll just look at a weekly, makes it easier. You can see how important this level is, right? So it's also going to put us right into the weekly 200. It's also recent, or not recent, but very historical support. Well, historical resistance. And what do we say about resistance? Old resistance turns into new support. We've never tested this from above yet. Since we broke above it, haven't tested it. So if we flush down there, I'm very interested to see, does the financial sector get a very healthy bounce and find really strong support down there? Again, it needs to get through those the rut row level on XLF first to come test those. But the way it tried to continue lower last week leads me to believe it probably will. Now, there may be some near-term bounces before we get down there. It may find support right off that quarterly pivot, and there may be some bounces in this sector just due to the fact of how oversold that kind of got, right? But again, I think at the moment, any kind of pop back into resistance would be a good short on individual names in that sector. We'll have to see what plays out this week. Real estate, very interesting. Broke that important. There's the rut row level on real estate. You guys can see that. Broke that. I don't know if you guys follow guys that are in the real estate world on Twitter. I follow quite a few of them, the same way I follow some of the guys that are involved in stock related stuff, FinTwit, right? Apparently Friday, mortgage-backed securities went no bid in the market, and that's like one of those very rare things. Very reminiscent of like some '08 stuff. So it's funny because we actually just closed on our house on Friday, but we're lucky we got locked in at a pretty good rate, thankfully. So part of the reason I've been following real estate so closely is because of the fact that we were buying a home and, you know, also possibly looking at rental properties. But this is pretty ominous just for the sector in general, right? Breaking that really should show us that maybe we're going to get a continuation lower in that sector, okay? Healthcare, coming testing these important levels. Will it hold? I don't know. To be honest with you, I kind of get the feeling that we may be seeing the first time that this level may fail. Obviously, you need to see it fail first. We can't just go assuming it's going to fail. But if it does, I would be looking for retests from the underside to act as some pretty stiff resistance. This looks like XLF did back here, right? When we finally put in this lower high and rolled over. And then look what happened. The first retest from the underside acted as really, really bad resistance or really strong resistance, right? So that's kind of what I'm thinking might happen on XLV. If we lose these, I see no reason why this can't just do one of these and then come back up here, test, stuff, and then head lower. So I don't know. First things first, right? Don't get ahead of ourselves. We'd have to break that level first. Again, I don't really follow, or it's not that I don't follow, I don't trade a lot of individual names in the materials sector or in the industrials. Materials still holding on to some key levels. Still looks like we're just building a nice long base. But again, in a bear market, eventually the Grim Reaper comes for all the sectors, right? So even though this is holding on, if the bear market were to keep going lower and continue on for any sort of near term amount of time, right? 3 to 6 more months, I don't foresee some of these sectors that are hanging on by threads still hanging on. Same with industrials is already broke down, right? It's already lost its level and it just retested. Again, we see this a lot, right? Break these important levels, retest from the underside, and then you get the big rejection. So I mean, this is just technically beautiful the way that happened. You got the monthly 20, the weekly 20, and that recent support turn resistance, right? Utilities retesting this level, still holding on to the weekly 20. Does it make a higher low here? Not sure. Again, like I said, if the bear market continues, a lot of these sectors end up, giving it up, right? There's only so long that even the stronger ones can hold on to, and it makes sense. Utilities is one of them, right? Because they tend to perform better in those late stage cycles. But it doesn't mean that, go back to any bear market and you'll see that they still get hit, right? Like there was 2018. What did I just accidentally click? I don't know what I clicked. Was this a product in 08, 09? It was. See? So even in a recession, it was one of those ones that was kind of later to the crack, but once it rolled over and cracked, it still got hit too. So if this were to continue to be any more of a prolonged bear market, eventually I think these things give it up. XLP, this one right here is not what they wanted to see. This one may be finally giving it up. Remember we talked about this last week. Lost that important level. We didn't realize, again, this is one of those things where like we can talk about very subjective things such as like, was that caused by Walmart and Target's really bad earnings and them getting destroyed? And then go, oh, well, it just reclaimed. Let's be objective. It got smoked, it lost the trend, and the first push back up into the underside of the 20-day stuffed, and it rolled back over and re-lost that trend, right? It lost the ability to reclaim it. So objectively, I don't give a shit if that was caused by Target, Walmart, or freaking God himself. It doesn't matter. What matters is the trend. What matters is what the price is telling you, and that's it. Objective, guys. Stay objective. So again, any kind of push back into the underside of some of these resistance levels on some of the consumer staples may actually turn into really good shorts. XLY, consumer discretionary. This one here is probably, if the bear market continues, this one's probably going to continue to get destroyed just because of what the sector is, right? If we go into a recession, consumer discretionaries are going to get hurt just based off the fact of what that sector is, right? What's composing it. Sorry, guys. But again, near-term day trading plans based off it, we'll see. Can still retest this level down here, show support. We still have the rut row level, the retest, show support. If it were to flush down to this like 137 area after having 2 straight big red days like that, the sellers are probably going to exhaust into that level because they're not dumb enough to keep trying to push it through after having such a big move, right? So you got to think of things in terms of sustainability of the move. So if we were to flush emotionally down there, it may be oversold enough that certain names in that sector would be looking really good for very, very short-term bounces, day trades, guys. Same thing though on the underside of a retest of that 153, 154 area, probably be looking for fades in that sector. Communications still hella weak. This one again, we talk about it every single week, was like literally the first sector to kind of go ahead and just start its own bear market, and it's just stayed weak, stayed heavy ever since. So again, no reason to think that it's not going to continue lower. I think pops into the underside of the 20-day probably provide pretty good short opportunities. XBI, this was the one that I was hopeful it was starting to bounce. And as far as reading the trend, guys, look, we had the long trigger. What does a failed long trigger create? Creates a very, very powerful short trigger. So if this, after this push up that just triggered the long, fails to get to the weekly 20 and then comes and breaks these lows, watch out below. That's all I can say is watch out below if we lose these recent lows after triggering the long and then failing to follow through. I would love to be wrong on this. I would love for this to find support because there's so many biotech names that I've just been following forever, just trying to figure out, like, dude, can we finally find a bottom so that some of these really oversold, undervalued names can start being bought for fundamental rebounds, right? For like just the fact that they're trading under cash value. So again, it's hands off until it proves to us that there's some sort of reversal happening. If this fails, I mean, there's no reason at all this can't come down here and test this 45 area. Okay. Tech still weak. Obviously, we just looked at the NASDAQ, so it should come as no surprise. Again, just like we talked about with like consumer discretionary, two giant big down days. Obviously, consumer the CPI numbers came out, and the reaction was really negative. If we flush really hard down into these rut row levels, I think sellers exhaust at least enough for a day trade for bounces. So there's a lot of tech names that trade extreme amounts of liquidity, have extreme amounts of range, and give really great bounces and are very, very predictable to the point where, you know, it's not, when I say predictable, I don't mean I'm trying to like predict the future, just in terms of probabilities, right? I can literally look at certain names and know that with that liquidity and that range and this kind of flush into a level, I can be right 7 or 8 times out of 10 and have a really asymmetric risk reward. And I have zero hesitation putting that trade on because I don't care if I'm wrong. I'll take my loss and take the very next one that comes along. And that's the name of the game, right? It's not about being right all the time. It's about knowing the probabilities and knowing the trade's asymmetric. So I think if tech flushes down to this 128 level with, you know, if we gap down tomorrow and then flush off the open, I think the sellers are going to exhaust at least short enough or a short enough amount of time for us to get some really good day trade bounces off that initial 30 minutes of the market open, guys. All right, XLE and XOP, energy and oil. Again, both are still in their uptrend, still very strong. Both have started to pull back. XLE has pulled back a little more than the oil. I think anything down in the 20-day, we can get some bounces. And the note I made about XOP is that even though it started to pull back, it still has quite a bit more to come in before I think support really shows up. But individual names, there's certain individual names that look really good in that sector. So we'll touch on a few of them when we get into the individual names, which we will do right now because I feel like this is dragging on. I apologize, guys. So we're going to jump right into the strong stocks looking for continuation. That's our first type of long setup. And the first one on my list is, let me move this out of the way so I can see it, is CNQ, I believe, right? Yep, CNQ. And this is a energy play, oil and gas. Again, you see how it's just come into the monthly pivot, the 50-day. I'm basically looking for Friday's lows. That's what I want to play against. If it can hold right there, this thing, you know, it's got a $2.30 ATR on it. On a $60 stock, that's plenty of range to make some good money. Looking for a flush off the open just to hold that 50-day and monthly pivot. Looking for a bounce play on CNQ. And the next name and the last name on strong stocks looking for continuation. Shouldn't really come as any surprise. With the market we've had, did you think there was going to be a lot of strong looking stocks? Probably not, right? It's CVX. And pretty much I'm going to be watching Friday's lows to see if they hold, but I'm not going to hold my breath. It's a $4.39 ATR. So that puts us much lower than that if it wants to flush off the open. The next level I'm looking is that 170 area, which puts us into this trend line here. You can see the VWAP boulevards down there, all that stuff right in that 170 area. So that's what I'm looking for on CVX. making sure I was quoting that level right. It's 170 is what I'm really hoping for. But if it holds Friday's lows and starts to show support, I may get involved a little early. Again, if I get involved early, let's say I play against Friday's lows, which are 173.65. If I scoop this down around 174, I'm not going to still be in it if we lose Friday's lows and start tumbling. I'm going to stop out and revisit at 170. You guys got to understand, knowing my levels does nothing for you if you don't know how to manage the risk. So do not just listen to whatever level I say, blindly buy the stock there, and then come to me next week saying, I got crushed on this stock. Did you get crushed too, Ricky? No, I didn't get crushed because I manage my risk, because that's my job, and that's your job too, guys. All right, oversold reversion setups. Berkshire, I love this one, baby. Anytime I see Berkshire get really extended to the downside, it's not where I need it yet, but I've got my eyes on this 275 level. If it can really speed up to the downside, I would love to be buying this off 275 for a bounce. So again, this one's not quite there. All the other names that pulled up in my screener for this sector or section, oversold reversion, nothing I want. This is the only one. Everything else, nothing there for me, okay? Just in case you were wondering. So we're going to get into the short setups. Weak stocks looking for continuation. First one is CF. And I traded this on Friday and I piked the living hell out of it. But, in hindsight, it was effing beautiful, that level. That quarterly pivot, that 92 area. So I'm looking for any kind of spike off the open up into Friday's high day. That's how I'm going to play this. 90 would be the first level. If 90 stuffs, I might get involved around 90. And if you guys look at the intraday on it, you can also see too. You can see 90s right here, right? You can just draw. Oh, there's already a line there, which makes it even funnier, right? Because where did that line come from? Okay, let's look. It was those recent lows. So obviously, after it came back under that level, the next time it pushed up into it, it's stuffed, and we rolled over lower. So any push into 90, I'm watching. But 92 is the real level I want, okay? That's CF. The next idea is MOS, and these two trade pretty tandem, right? So I might not have both on at the same time. It might be one or the other. Who knows? But this one, same idea, right? Broke down. I'm looking for retest of Friday's highs. That's all. It's very simple. I want you guys to understand one thing. Oftentimes in the markets, the simpler, the better. The more you complicate it, the more you add in all these variables, the more it's likely to just be you trying to get too fancy. Get the ego out, guys. Keep it simple. Spike into Friday's highs, I'm looking to fade MOS. All right, and the last one in this list is Disney. Disney really broke down, looking for a pop. I wrote down, 102. The 102 level comes from the intraday stuff, guys. You can see it was basically Friday's high day. If it gets through 102, I'm not taking it off my radar. I still like this if it gets back into the underside of the 20-day, guys. This one looks pretty vulnerable, especially since it lost that psychological 100 level. It may flush off the open because it lost that level. If it does, I'll probably look to hit the pop back into 100, right? So keep in mind, I can give you levels right now. I have no idea where we open. If we gap down, we gap up, I don't know. But I also know how to make plans based on where we open, right? So if we don't gap down and we don't flush off the open, then I'm looking for 102. And if 102 doesn't work, I'm looking for that 106 area. If we flush off the open, go straight down to 90, 94, 95, I'm looking for spikes back into 100 to fade. Okay, so keep in mind, I'm not trying to just have one plan. I have 4 or 5 plans, right? If this, then that, guys. All right, so that's it for the weak stocks looking for continuation. The last section, overbought reversions. Dino's still on my list. It's still, it started to roll over. So the only thing I can say is, one, I still am not a huge fan of the liquidity. I want higher. You can see I have an alert up there for that 60 push. If it pushes 60, I still don't even know if I like it up there that much. It makes sense that we're stuffing up here, right? I kind of think I may try to play this basically into this either 57.50 level or into 58. And I'll just use over those highs as my stop. understand, I want this higher. But if this is starting to roll over here, there's a lot of room back to the 20-day. That's all there is to it. And it definitely broke some levels. So I'm thinking maybe pops back into the resistance from last week, can offer me a good risk reward, nice easy fade. But again, I want this higher. I want this to stop me out and push higher and give me a much higher probability, more A+ look. But it is what it is, right? We don't get to choose what the market gives us. We trade what it gives us. So I know it was a short prep in terms of ideas, so I did want to touch on one more broader topic, and that is the China basket. So a lot of the Chinese names triggered really high time frame longs, right? PDD was the first one. We talked about this in a few preps ago. I think it was like 2 weeks ago. This is the setup that I keep showing you guys, right? So the push down, the push up, and then the break of the levels. This was a trigger on the monthly time frame. So it has a lot of room back up to the monthly 20 if it wants to get there. Keep in mind, we're running into near-term resistance. But that doesn't mean that I'm taking this off my watch if this flushes down. So look what we did. We got a lower high right on the 20-day or the 200-day. If we come down under 57.50, I think this can unwind back down into 50. If this unwinds back down into 50, there might be some good opportunities to scoop on these because the bigger picture is telling us it's trying to reverse trend. And it's not the only one. If we look at some of these other ones, you're starting to see some of these higher time frames reverse, right? This one broke these levels here, and just because it's stuffed in the near term doesn't mean it's not going to pull back to support. Find some support on a retest and then head. So if it does that, I want to be a part. I want to get involved on the long side of China names with defined risk, right? And that's the whole purpose of reading what the author is writing, is like our risk is defined. I don't care how crazy you call me for wanting to be long China names, right? It doesn't matter because all I'm doing is letting the risk reward play out, letting the setup do what it needs to do. And what do we have right here, guys? What was this? There was that failed breakdown. We just talked about that earlier in the stream, right? Failed breakdown, reclaim, long trigger, and then it was straight up. And this is not hindsight. We talked about this a few weeks ago before any of this shit happened. And literally, I had alerts set. If you were in TrueTrader, you guys know, you saw I would post the alerts when they would trigger on my trading view. JD was another one, I believe. Look at JD breaking out of this really long downtrend and then retesting. Any kind of flush back down into some of these levels got to be looked at as possible opportunities for scoops. We have not seen this kind of strength in these sectors for quite a while. Even when they had the big bounces, these were just your initial bounces after really big sell-offs. We still needed to see some of this productive price action before we could get involved. And look, failed breakdown right here. Reclaim, higher low, and then the break, and we went. So, guys, I can't reiterate enough. Learn how to read trends. Learn how to read how the different time frames interact. If you don't understand it, I'm not going to spend all Sunday talking about it on a Sunday prep. Join TrueTrader. Use the YouTube code. I think it's just YouTube in all caps, right? You get 20% off on your monthly cost or subscription to the room. And trust me, I talk about this stuff nonstop over at TrueTrader. So, and I can't underscore how important it is to absolutely understand how to read what the author's writing. So I'm going to try to answer some questions, but my kids are at the pool and I am trying to go join them. So we'll see if there's any questions that we got. Let's see. Sunny D, Amazon rolled over post split. Thoughts on it breaking support and rolling over to 101? Yeah, I mean, it's going to follow the tech sector. Again, remember, I think a lot of people thought it was going to do what Microsoft and Tesla and Apple did with their forward splits. Again, we talked about this, I think it was last week or the week before, why I didn't think that was going to happen. We're not in the same broader market, right? We were in a bull market when they did theirs. Amazon does theirs in a bear market, and now we're selling off. And duh. Again, it could break 100. It could head lower. But we got to keep in mind, it could be a higher low, okay? This still could be a higher low. We still need to have alerts set up here for if we break above. Let me just set the alert now so you guys can see where I would put it. Now that obviously this alert becomes worthless if we make new lows, right? But if we don't make new lows, then I definitely want to know when we break last week's highs, because then we may have the higher low followed by a higher high. And not only that, but right after what happened, right after a failed breakdown. You see this failed breakdown right here? Then the reclaim, and then we make a higher low. That could be powerful. Again, it's not about me trying to predict anything. It's about me just making if-then statements, because trust me, if this loses 100, then it can get ugly. It's as simple as that. All right. Nikki is asking, can I cover SE? I can look at it. Guys, again, if you want my thoughts on a stock, let me know if you're, like, I can tell you what I see, but you got to give me, like, are you asking about a long, a short? What levels are you looking at? This one has triggered the long. If you remember, we talked about this, right? Here was your failed breakdown, and then the long trigger. Now it's kind of just giving you the option for better prices here if you were trying to be long this name. I think flushes down here are great scoop opportunities for bounce plays right down into these recent lows. What I love about this name, liquidity, range. Look at this $7 ATR on something that trades 6 million shares a day, and it's an $80 stock, right? Dude, it moves 10% a day on average. $7 ATR on a $70 stock. That's nuts. I love it. I trade this name a lot. It has recently triggered the long, so I am leaning more towards the long side. But keep in mind, long triggers can fail, and they do create really powerful short triggers. So there's no reason that this can't fail and head lower. We are still in that market, but you know, keep your bias nimble in terms of, you know, a lot of people are just constantly like, oh, we're heading lower, we're heading lower, we're heading lower. The more people that think that, the more I tend to go, okay, let's like not just be part of the herd. Let's absolutely just stay objective. And objectively, it triggered a long. What is the target for that long? It's the weekly 20. You can see it's still up at 106. So it still has upside if the author so wants to continue the trend since it tried reversing on the daily. Will it? I don't know. But we still have to just have defined risk. So hopefully that helps. KH is asking, what's my top #1 tech play for long term? Nothing. Absolutely nothing. I have zero things that I'm looking at to buy long term, especially in the growth or tech sector. I'm following everything until we get a market that bottoms and puts in those higher lows on those higher time frames, and then hopefully bases for a while and shows me that it may be ready to resume a bull market. There's nothing. I am not the type of trader that is trying to catch the bottom of a bear market. Same way I didn't give a shit about trying to catch the top of the bull market. And that's one thing, you know, I'm not, listen, if that's your thing, you want to catch the bottom, you want to have the ego and be like, oh, I nailed the bottom, have at it. That's personal, right? Do it yourself. I don't care. It doesn't affect me. I just want to read the trend and go with the flow, especially where my 401 or my SEP IRA and my other, like my kids' college accounts and stuff that I have, the longer term stuff, I could care less about where I buy a stock. All I care about is what is the trend. If it's in a downtrend, I'm not even looking at it right now in terms of long term stuff. I hope that makes sense. All right, guys, like I said, I have my kids and my wife are at the pool, and it's hot as hell out here in San Diego. And you know, this has already kind of gone on for I can't tell how long we've been on the live stream, but there wasn't a ton of ideas. That should tell you something in itself, right? Like, especially on the long side. The only two names I gave you for longs were oil, energy, and everything else is kind of like, you know, just see what the trend says. China has that, if anything has strength at all, in my opinion, it was China. I mean, outside of energy and oil. Guys, check us out at TrueTrader. Use the YouTube coupon code or whatever you call it. If you got more questions, I'm in there every day. I post a lot of stuff. I teach nonstop trying to get traders the tools they need to stay safe. How to read what the authors write, how to be objective, how to track your stats, how to know your numbers. That kind of stuff, TrueTrader. Till then, see you at the markets on Monday. You guys stay safe and hope everybody